evening, ladies and gentlemen. My name is Chris Cooper, known as the Channel Guy Trader, and I am reporting to you live from Wall Street Trading satellite office down in sunny South Florida. Today's date is Wednesday, October the 24th, 2012, and here is today's After the Bell market summary. I want to apologize that I'm getting this video out late, as I've been trying to get the videos out a little bit early, but been pretty busy. Today I was at Florida Atlantic University over here in Fort Lauderdale, actually by Davie, which is the sister campus of the one they have up in Boca Raton, which I did a presentation for those students out there last week Wednesday. So it's always pretty interesting to go and see people that are a little bit younger than myself, interested in learning about finance, investing, and trading, and I find that motivational for myself being able to teach them, and for them looking to learn more about the business. So in any case, let's take a look at the markets today. The Dow Jones was down 25.19 points. The Nasdaq was down 8.76, and the S&P 500 was down 4.36. If we take a look at the breadth today, we had 3,462 issues declining on the NYSE, Nasdaq, and Amex. We had 2,647 issues advancing on the Nasdaq, NYSE, Nasdaq, and Amex. So therefore, bears were in control again today. However, you're not seeing those huge ratios like 4-to-1 in favor of the bears, 5-to-1 in favor of the bears anymore. Kind of shows you that the selling pressure is starting to calm down. The selling pressure is starting to calm down a little bit. We did have 120 new issues making new highs, and we did have 95 issues making new lows. That's a little bit decent there. So let's go to start off by taking a look at the SPY daily chart. The SPY was down 40 cents today, closing at 141.02, down 0.28%. There's nothing showing us here that we're ready for a bounce quite yet. We did feel this little minor gap that we had right here. However, we did close below that gap as well from this 141 level that we had from this gap up right here back on September the 6th. Okay, and right now it still kind of looks like the market wants to go down. We're going to take a look at a couple stocks at the end of this video, near the end of this video. However, right now we're taking a look at the indices and the SPY, which is the S&P 500 ETF. Okay, a lot of retail traders use this to track. I track both, being the S&P 500 futures, E-minis, and I track the SPY. And I've been bringing this to you guys in the video more, since I know a lot of you guys out there track the SPY as well. So therefore, SPY, you want to make sure you watch this 141 level. Holding below 141 makes it more vulnerable for a move down to 140, which is a nice support down here. And then if we break below 140, we have some nice support around 139.52. And I'm just going to leave those levels like that. Obviously, if we have some more selling pressure, I'll definitely make sure I tweet out or give some other levels to watch going forward. As far as resistance goes, the previous 2-day high resistance has been around this 142 area. So you can say that we're kind of in a range the past 2 days between 140.75 and 142. So about a dollar range there on the about slightly over a dollar range there for the past 2 days here, and we could just continue to chop around here until we get some traction. One thing to take note of is that we're still below this prior resistance. Oops, sorry. We're still below this prior resistance right here. All right. Well, was support back there? Was support right here? Was support right here till it finally cracked. So now this 142.58 area is definitely going to be some resistance to watch. So you want to make sure you watch that 142.58. Call it 142.60 area. All right, but right now, for the past 2 days, we have been in this little range between 140.80 and 142. It's about a $1.20 range there. All right, let's take a look at the ES, the S&P 500 futures, via some of my channel analysis here. All right, which I've been using this for a while, but I've been showing this more in my videos just to show you guys a little bit of the extra stuff, that I do based on my system here that I use to help me gauge the market. You can see here we broke below that bottom range down there that we've been tracking and playing long against, and calling out long entries down here near the bottom of the channel since we've been in this channel. All right, so kind of been using this channel back here since back here in mid-September, early September. But you can see we got that break below that bottom trend line on Tuesday, and now going forward, it's going to be very important to see if we can get back above this trend line right here. All right, if we get back above this key trend line, All right, and we hold above it. That means anybody that got short below this trend line will be in a bear trap. All right, it's too early to call it right now, and I do not want to call that. But if we get back above this level, call it 14.18 or so, and we hold above that level, then we get back above 14.20. Anybody that got short below this little level right here, below our channel break, basically, could be caught in a bear trap. But we'll wait and see. Right now, we're holding some support around this key of 1407 area. Sorry, 1405 area. All right. And one level that I was looking for us to come back down towards was this prior channel that we were in right here, looking for a back test. We didn't get an official back test because if we did, that would have took us down towards say 1398 or so, 1397. However, we are finding some buyers right in front of that level right there. You can see how my channel system is starting to pick up some support right here off this key trend line. All right, and if we continue to hold this key trend line, I would be expecting to bounce, since we are obviously oversold from this 1460 all the way back down here towards 1400. So down a little over 60 points within a matter of 6 days or so. Okay, so that's how the ES is looking. Let's take a look at the triple Qs, the NASDAQ ETF here. All right, and you can see that we're sitting right on the support band that I have, along with sitting right on top of the 200-day simple moving average around 65, around 65.16. All right, no, actually it's not 65, it's 65.07 to give you the exact number. All right, based on the number that Thinkorswim has. Now, tomorrow's going to be a very important day. Obviously, tomorrow we have earnings from Apple and Amazon. We'll take a look at those charts here shortly, but that's definitely going to be important. As a matter of fact, let's go ahead and take a look at it right now. So Apple, right, has earnings coming out tomorrow after the close, and this thing looks like it's still holding up weak. And if this thing breaks below 609.15, I would assume that it's going to trade back down here towards 590, maybe 586. Let's take a look at Amazon. And you can see Apple's in a nice little downward channel. So we really need to get above 635.70 for me to even think about being bullish on this stock here. Let's take a look at Amazon. All right, Amazon, I was looking for this thing to pick up some traction today. It was trying to hold up a little. It was trying to hold up throughout the day as it was grinding against yesterday's lows for most of the session until finally it gave way. And now it looks like it wants to come down here and touch this 200-day, This is exponential moving average around $224, and then we have the 200-day simple moving average around 216. Okay, and that's how I'm definitely going to be watching this stock pretty close to see if it wants to get a bounce, because it does have a gap fill all the way down here at 219. So if this stock was to gap down or was to continue selling off to 219, I would definitely be interested in picking up there. Or if it was to sell off a little bit more and hit this 224 level and hold here, I'll be interested in picking up some scalp shares or some option plays there for a long opportunity for just a quick bounce and see what happens from there. So anyway, back to the Qs real quick. So the levels we're going to be watching on the Qs going forward is obviously this little resistance level around 66. If we can get back above 66, that would be good. However, if we continue to hold below 66 and then we break today's lows around 65.03, next target will be the 200-day simple moving average around 64.58. The next target would be down here, I would say, towards 63.5 or so, and that wouldn't be good, because then for sure we have broken this little uptrend, and the market is vulnerable for some more selling pressure, especially in these NASDAQ stocks, which have been acting weak for sure if you guys have been paying attention to the market. All right, so that's the Qs. Let's take a look at the IWM daily chart. This is our small caps. All right, we do have a little bullish pattern that could be setting up here, similar to the pattern that set up here back in July. This little downward sloping channel. You can see we performed a hammer yesterday and bounced right off that 200-day simple moving average around 80.43. All right, however, today we were not able to close above yesterday's close, but we still have to wait and see if the market, if the IWM is trying to get a bounce here. The longer we hold above 81 and trade sideways and don't go back down towards the bottom of this channel, the more that I would think that they're trying to hold this little bid right here, and they could get a nice move to the top side. If we do get a move to the top side and we break back above 83, obviously that'll be bullish, but I don't want to get too ahead of myself right now. Just worry about us holding above 81, or if anything, holding above yesterday's lows around 80.41. Okay, but IWM, I'm expecting it to get some type of a consolidation around here, and then see what happens from there. All right, let's take a look at the dollar index. Dollar index continues to be in this little choppy range, and that's why we're starting to see some volatility pick up, in my opinion. You can see right now we're near the top of the range, so they want to keep the dollar index weak, the dollar weak, so these commodities and the stock market can start getting a bounce. It will be a perfect time to do it now. As you can see here, we have hit the target from the bottom of the range to the top of the range. All right, and we could maybe be expecting some pullback, which would mean that the market could get a bounce, along with the commodity stocks that have been getting hit. They could get a bounce as well, and the precious metals could get a bounce as well. So we're definitely watching the dollar to see what that does, and keeping a close eye on some of these precious metals that are coming off their highs. Let's take a look at the volatility index. The volatility index continues to remain at these elevated levels. If you guys recall, we've been talking about the volatility index getting a pop above this little downward channel. All right, we were expecting a big move in volatility since we were getting compressed between these two levels. Again, which we gave this out before all of this happened, and we've been tracking this. You can go through the videos and check that out. If you have not gone to our website to see our videos, it's wallstreettrading.com. Click on the upper tab on the right. Click on the tab on the upper right-hand side, My Wall Street TV, and it takes you to our video archive. If you're interested in getting a 14-day free trial to our chat room, fill out the form on the right-hand side of the home page, and you will get the password and the website that you need to log into emailed to you. So anyway, the VIX remains at these elevated levels here. You can see that we're chopping around these 200-day simple moving averages and exponential moving averages right here on the daily chart. And one thing I've come to realize, or one thing that I've come to notice, I should say, is that every time the VIX spikes up, they sell it off. That has been the pattern. Every time the VIX spikes up, they sell it off. VIX spikes up, they sell it off. Spikes up, sell it off. So right now we're going to see if they're going to sell this volatility off. Now, for those of you guys that have been in the chat room, that you guys know this downward channels that break to the top side, and you guys know how we play it, obviously we're going to be waiting for that pullback in this move to see if it's going to hold a higher low off of this breakout candle low, or if it's going to get an official back test and back test all the way down towards the bottom of the channel, or in fact if it's going to come all the way back in and actually break back inside the channel, which that would obviously be bullish on the markets, bearish for people that got long volatility, and would also mean that there's no fear in the market, which I don't think is the case, since obviously we're making slow downward trend line. So going to be keeping the VIX on close watch to see how this gives us kind of some more clues on the market on what we can expect going forward, and going to continue to use it as a gauge like we have been doing pretty accurately and pretty well. All right, so now let's talk about some stocks today. Netflix obviously came out with earnings. The stock gapped down and traded higher. It does have a lot of resistance up here towards this 64 area, because that was the base. As you guys know, that was a building base. So now this area to the right is going to act as resistance, and that's going to be around the 64 area. So I will not be surprised if Netflix continues to squeeze some people out that try to short it today, or some buyers come in thinking it's cheap, but it's going to be met with some supply up here. Want to see how it acts at that level. Right now, I'm currently not trading it. That's Netflix. We also had some news out of Facebook. All right, talked about Facebook this morning. My partner in the chat room, James, mentioned it was a short on the gap up. I agreed with him. That was one of the trades that we gave out. And if any of the traders took that in the chat room, they made out pretty well on it, as the stock was up a lot after out. Stock was up about 25% or so into pre-market into this key level. Okay, and it was just a nice selling pattern, as it made sense to sell that action right there. All right, and if you watch pre-market and you have your pre-market charts up, you would have been able to participate in that trade. All right, another stock that came out with earnings today was VMW. Now, VMW was holding up pretty well, but then when the market started coming in, it started fading away. VMW, keep this one on watch. A couple stocks that I have on my list to keep on watch is Sears, SHLD. I like how the stock is trading sideways in this little channel range that it's been in since back here in early April. All right, if this thing could hold above 62 and find some bidders and volume picks up, I do believe that the stock could break out. You can see the moving averages are starting to curve up a little bit, and it looks all right on the weekly chart, and it looks like it's trying to get back up on the monthly chart. Sears, it's on the A list right now. Riverbed, this was a stock that we called out yesterday for long. If you guys followed me on the Twitter stream, this was the only stock that was showing some good relative strength when the market was selling off, and for that it got rewarded when the market tried to bounce, and therefore the stock continues to remain on the A list. Keep it on watch if it can hold above 24. Another stock that I have on the radar is AGU. All right, AGU, we call this for a great trade on Monday when it broke out, held up a gap down, then held up and recovered on Tuesday here. Wednesday today had a little bit of selling pressure. As long as the stock can hold above 106, we want to keep it on watch. Let these 8 EMAs catch up to it, and I think this one could take off. When I was watching it on Monday and I bought those 110 calls, there was a lot of activity going off on the out of the money option. So I think something's up. They have earnings, matter of fact, in about 2 weeks or so. So keep AGU on watch. Still remains on the A list as it is one of the stronger stocks in the market right now. CRUS. This stock as well looks interesting for the fact that it's one of the semiconductor stocks, and this one's holding up. They have earnings on Monday. They are still holding their gap earnings from back here when they reported back here in July. And you can see how this thing's just forming a little support base down here around 36. If they come out with good earnings next week, I wouldn't be surprised to see the stock take out these highs. All right, especially if it goes trending into those earnings. I wouldn't be surprised to see that happen. So keep CRUS on the watch list. Another stock I want to talk about here is Lulu. Lulu had a nice little bounce when the earnings came out. Sorry, not a bounce, but had a nice little breakout when the earnings came out. Now it's back near the bottom of that big breakout candlestick with the volume, and also it's bouncing off the 200-day simple moving average here. I'm looking at the 60-minute chart. Let me go ahead and turn this into a 60-minute chart, and you can see how this thing had this little range right here. All right, and kind of really just held above that little range that it broke out of yesterday during the later part of the session, and now continues. As long as the stock holds 68, look for a move over 70, and maybe look for a little snapback rally back up towards 72. That's one idea that I have on watch that I will continue to watch, and I have alerts set on it, and I'll track it intraday for relative weakness or relative strength. Let me make sure I'm not leaving anything out. Let's talk about the commodities real quick. USO continues to remain weak. You can see we are going to have some support on the USO around this 30.53 area. I continue to think that the USO will maybe trend lower. I'm looking at crude oil via the crude oil futures right now as well, and the crude oil futures still has a little bit more downside down towards this 84 level. Then if they really want to sell it, it could go down towards 81. Obviously, if that happens, a lot of these energy stocks will sell off a bit, and that will definitely cause some selling pressure in the S&P 500 since it is built with a lot of since there are a lot of energy stocks in that index. And I think that's about it. CMG, another stock that I'm watching. I call this out for a long intraday, and a couple of the traders took the trade, and I mentioned it out on the Twitter stream. I was able to get long the 240 strike weekly call options for $2, and I sold them at $4.40. So that was another good trade that we had out in the mywallstreettv.com chat room. If you have not been to our website, please check it out, wallstreettrading.com, bringing you accurate information with no bias. We trade both sides of the market. We look for the market to show us what it wants to do. We look for the market to show us what it wants to do, and then we look for trades to take around our watch list. So hope you guys had a great trading day today, and I'll catch you guys bright and early tomorrow morning. Going forward, I'm going to be opening up the chat room at 8 o'clock in the morning. All right, so if you would like to go into the chat room early, it will be opened up. It will be open from 8 o'clock in the morning and not at 8:30 like I've been doing it, as I feel that I kind of need more time to get prepared in the morning, so I'm not rushing in the last 30 minutes or so. So anyway, that's about it, guys. Have a great night.